Hi everybody, we're back here on European Closing Bell. A technical look at the markets is up now. Yannick Naud is a portfolio manager at Glendevon King Asset Management. Yannick, we've really been honing in on the dollar yen story and wondering, how much further we can see the trend.
Well, since April the 4th, the low at 92.7, we saw a very, very big rally of the, a very big weakness of the yen, shooting very close to 100. And now, this week, we stay very, very close to this 100 limit. So the idea is to know where are we going from here. Obviously, there is plenty of, in order to go further up, we have to break some resistance on the existing charts, as well as some historical resistance, because back in November 2008, I think we had a high of 155. In April 2009, it was 101.45. So there's plenty of resistance to be broken in order to expand this trend upward. So in the short term, we think that there could be some retracement around 98.4 or slightly lower. Even though in the medium term, I think no one doubt the resolution of Kuroda of the Japanese central bank in terms of expanding balance sheet and trying to do its best to weaken the yen and have some inflation.
I just wonder what the knock-on effect will be elsewhere and in some of the other commodities if we indeed see this move continuing.
Well, if there is this move continuing, Japanese assets will have to be reinvested in other asset class, not only in yen. So it could be European bonds, it could be shares, whatever risky asset around the world. It's not the first time that what's happening in Japan have consequences around the world. It's been the case at the beginning of the crisis in Japan in the 90s and 2000, and it's likely to happen again.
Let's move on to the oatmeal and talk about the oats.
Yeah, the OAT, the 10-year French OAT.
Sorry, I couldn't help it. It's Friday. What can I say?
The French government bond is one of the main beneficiaries, in fact, of this allocation of either Japanese investor or at least Asian investor into European bond market. I think they went into the OAT not because of economic statistics, which are horrible, or political stability, which is problematic right now in France, but mainly because it's a large pool of bond available, and it's an easy way to get in for quite a large number. That's why the yield touched almost 1.7% earlier this week. We think that even within the Eurozone, there's much better value, risk-reward value in terms of government bond, like Netherland or like Finland or EFSF itself, or even a basket of Eurozone country. If you do today a basket of every Eurozone country weighted by the GDP, by each economy, the average yield is 2.75%, so it's much better than what you can get on OAT right now.
That is quite a bit better.
It is. I'd say on the French bonds, though, we've been looking a little bit on when reality would set in again, because obviously the French economic data has been absolutely abysmal. It's been poor, and then it's just gotten poorer. So you would have actually expected yields perhaps to have risen here, and then France to have been taken a little bit more towards the periphery. However, obviously now we're in a situation where I really, really agree with one comment which was made in the sense that France's bond market is a big and liquid market. Yes. So when there is a lot of liquid capital available, that will tend to find its way into these markets, and yields can be pushed, especially in fixed income market, yields can be pushed much lower than what would be merited by fundamentals.
Yannick, thank you very much.
Thank you.